there, everybody. I hope you're doing well as at the close on Tuesday being the 7th of April 2020. I want to bring to your attention, obviously, today's candlestick. This is what we have during the intra-session move. However, it is going to look more like that of a bearish counter-attack when I get the actual daily updated bars. So just work with me here a little bit. This candlestick itself, it's going to be a real dark candlestick, and you are going to see that it gapped up to begin today's session. And during and really throughout the entirety of today's session, as at Tuesday we closed, or at least we sold off, and we closed more or less unchanged as to where we closed yesterday's session being Monday. That's what's giving this candlestick its dark bar hypothetically. Now again, very similarly, if I look at my chart at the moment, you can see that we have that of a shooting star candle. They both express really largely the same sentiments, whereby again, intra-session, it was looking very positive, it was looking very strong. That, of course, is the upper wick here on the S&P 500. Again, however, you can see in the top right-hand corner of my screen that we closed down just under 5 points on the overall net differential between the close on Monday and obviously where we closed at on Tuesday. Both of these candlesticks, whether or not you want to call this that of a shooting star candlestick or a bearish counterattack, which is what it will change to in about 15 minutes time. I just wanted to put this video out. Both are essentially the handbrake being pulled on the market itself. I will say, if there was a signal to look for, more or less after the entire discussion that we have had over the past number of weeks, right, talking about the odds of the market coming back down to close this open window, this is exactly the type of candlestick that you would want to see, because essentially what happens is, or what is really looking to happen, is that if we're just continuing this discussion between the bid and the ask roughly, and really just talking about the rough channel, whereby we've seen support at the bottom and resistance at the top, now that we've marked the P for perimeters, okay, with this candlestick over here on the 23rd, and then more importantly, or more recently, this little resistance area going back to the final week of March. What we have here now is what appears to be a break of the range to the upside, whereby, again, if you wanted to just consider this out of that resistance area, a lot of people have probably set up a lot of bullish trades, or at least breakout trades on the overall market indices, taking into consideration the swing high over here, pardon me, of March. And now at the moment, I'm losing my voice as I sit down and bring you this recording, but right now at the moment, if they have placed those bullish breakout trades, they are now underwater, and it's almost as if they've got caught. All right. So if we're looking at this individual candlestick as it's Tuesday, shooting star or that of a bearish counterattack once it updates, if there was going to be, right, that reversal, which is going to work in conjunction with the daily oscillators coming back down to move into synchronization. Remember how we were talking about the synchronization of the daily time frame in conjunction with the weekly time frame? I'm just going to write W and D. This here is meant to map, obviously, the oscillation. If you can overlay that of the stochastics, and more importantly, pardon me, that of the MACD as well, when we go up fractals on the daily, which now moving back up into overbought, surprise, surprise, at the top of the channel. And then when we go into a larger fractal, when we come back on down, you can see that we're moving still into oversold. And this is sort of that hangover type of behavior that I've been talking about, or trying to use when I'm talking about the synchronization, okay, of the two different fractals. So you can see here very quickly, it appears as though, right, short term, the buyers have been caught out, or they have just been caught out, being a little bit overly ambitious, so to speak. However, of course, if I go to the weekly charts, it has again still been a very promising week for the first two sessions. I'm assuming that this candlestick here, right, is going to look a lot different in another 2 sessions time as at the close on Thursday, right, as to what it looks as at the close on Tuesday. Obviously, we've spoken about this open window here. We've obviously closed this open window over here. But again, we've just reopened it with the move that we saw on Monday to begin the week's worth of trade. Now it looks as though in the daily time frame, we could just as easily see these markets collectively roll over from this false breakout to the upside. Okay, now that we've seen today's candle, and really just catapult back down towards, right, the gap closure on the S&P 500 down here around 2,000, right, 250, right, to 2,300 points, somewhere in this general vicinity, which makes a lot of sense to me. So again, a lot of people have been emailing in, anecdotally I can talk about, and they're even telling me about their own personal battles with the FOMO effect, the fear of missing out. And this is just, again, a perfect representation, unfortunately, of probably a lot of, I guess, unconditioned people, to some extent, right? Outside of pro generally, but it's just a sort of a broader representation of how, I guess, the masses are feeling right now, whereby they're starting to begin to feel as though they can dip their toe back into the market, or at least it feels safe enough to do so. Probably right at that, probably most incorrect time up and around this resistance area. So again, we'll monitor this into Wednesday and Thursday, but just be aware that as at today's candlestick and the big reversal that we have seen intra-session, makes a lot of sense to me that we may just be pricing in that of the final, right, last thrust of this first wave back down to close this window, or again, even potentially overshoot it temporarily before again we set off and move into more of a prolonged upward advance over a number of months. So just be aware of that. Again, it's very important that I show you this. You can say as well, or suggest that we are starting to, or very close to, right, actually moving and sort of reacting or intersecting that of the declining 50 exponential moving average on some of these markets. You can see it here on the NASDAQ, you can see it on the Dow Jones, you can see it on the S&P 500. And again, technically they should act as resistance. However, again, bringing the larger or more of the moving pieces together of the analysis picture, this doesn't explain everything. So I just wanted to point that out to you as well. What's more important are these upper, longer term, simple moving averages on all of the US financial market indices. These are going to be key. I assume before we get on up to retest these areas, again, they're coming in just above 3,000 points on the S&P 500. The 200-day simple moving average is 3,017. The 100-day simple moving average, which is interesting, it's above the 200 still. It's coming in at 3,064. So again, these are going to lag over time. They're going to slowly continue to decline. I assume price action's going to go through a movement like this, and then obviously come back on up and retest, right, these declining simple moving averages. And this is going to be the real, I guess, test of truth for the market. It may not come in the period of June. I'm just trying to illustrate this for you and to sort of just give you a representation of where I believe we are. But it all starts here, and to see whether or not we see a reaction off from what is really that of a bearish counterattack. However, it is still summed up quite well with that of the shooting star candlestick during today's session as well. This is just going off, right, the recent market close, which is subject pardon me, to change once I get the end of day data. Okay, so I hope that helps you, everyone. Stay safe, stay healthy. I'll be back with you again later in the week for another market address. Otherwise, jump into that pro analysis class. All the best, everyone. Farewell.